But in essence, they're trading, 7 or 800 million ounces a day in London, 2 billion a day if you add the COMEX and the Shanghai market. But in London, 7 or 800 billion ounces a day with a float of 150 million ounces. What could possibly go wrong? The pressure is accelerating. It'll be much greater if China and potentially the U.S. curtail exports. Part of naming silver a strategic element is that the U.S. can now very easily, the president can restrict and curtail export. And this sets the stage for a potentially explosive reaction if demand or the systemic stress accelerates. What is the systemic stress? It's if one of these banks in London has a failure to deliver.
Something massive is happening in the silver market right now, and almost nobody is talking about it. While mainstream headlines stay focused on stocks and election noise, the real action is unfolding behind the scenes, where governments, sovereign wealth funds, and the biggest money on the planet are aggressively positioning for a seismic shift in gold and silver. In the last few months, the U.S. officially reclassified silver as a critical mineral. China tightened export restrictions on precious and industrial metals. LBMA and COMEX inventories dropped to multi-year lows. Silver surged back above $50. Wall Street analysts raised gold and silver allocation targets to 20 to 25%. Andy Schectman has been warning for years that these exact conditions, tight supply, soaring sovereign demand, and failing trust in the paper system, would set the stage for a historic reset in precious metals. Today, we break down what's truly happening in the gold and silver markets, why the insiders have already moved, and why Andy believes the next phase will be unlike anything investors have ever seen. Stay with me. This is the moment long-term holders have been preparing for.
I think we're at a tipping point in the silver market. And I mean, I think you point to the growing shortage of physical supply at the highest levels, the LBMA, the COMEX, and now even the Shanghai market. They're all showing, stress, if you will, in supply, and the amount of, or the number of deliveries is off the chart. And coupled with, surging demand for things like industrial, investment, central banks, sovereign wealth, the same stuff we've been talking about forever, man. Silver is being pulled from every direction. That's just the bottom line. And not enough talk about it anywhere except on the alternative media channels, so it doesn't gain any traction. But where you will start to see some traction, in my mind, is the fact that the U.S. government just designated it as a critical mineral. And to me, this changes the narrative. Silver is no longer just a commodity. It's a matter of national security, national strategy. And when you talk about the kind of potential that silver has, remember that in terms of market cap, it's the tiniest little nothing market. And when capital begins to flow in, like the United States government and the sovereign wealth funds, it doesn't move gradually. It will erupt at some point. I do believe that. But the bottom line, Jesse, is you got tight supply, you got surging demand at the highest levels, coupled with systemic risk and the LBMA and what could happen if we see a delivery failure, coupled with official recognition. I would say silver isn't just poised to move, it's ready to explode. And yeah, it has been catching its breath, and anything that moved that fast, 40% in a couple of months, is overbought. That's the definition of overbought, and it needed to correct. It did, and here we are back above 50 again. So yeah, I say buckle up for what's coming next. Look, I'm not trying to be anything other than honest. Either many of the things I say, people could say I'm stupid for saying them, or maybe I just have the courage to say what I believe. And I have been saying this on your show for a long time. This is confirmation of what I've been saying. The fact that the U.S. just named silver a critical mineral, along with China's tightening exports, there's no coincidence there. This is governments recognizing, I think, silver's strategic importance. Go back a year or two, Canada, many of the miners and players in the silver market in Canada tried to do the same thing, to have it reclassified a strategic metal, not an industrial metal. But this is an understanding, an awakening. It means a floor has been put under demand, number one. You have policy-driven buying now that will be coming in from the U.S. and from other countries like China, who will see that this is musical chairs, if you will. And at the same time, you have a global supply crunch. You got players getting squeezed. And you get China, who is, a big player in the silver market, limiting exports. Yeah, that's a big deal. Now, silver isn't just an industrial metal anymore, Jesse. It's obviously it's strategic and it's monetary. It's essential. And I think now that governments are making that official, you know, I think from the level, the highest levels, maybe governments just lit the fuse. So yeah, I think it's a big deal. It's a huge deal, bigger than just about anything I've seen in a long time in the silver market. We know that India has been a massive player in the silver market. You can find quotes that it's purchased between 6, 7, 800 million ounces in the last 5 or 6 years. Copious amounts. We know that Russia said we're going to add it to our strategic stockpile, being one of the first countries ever to say that. We see massive deliveries. Talk to David Jensen on the COMEX, the LBMA numbers, huge deliveries coming off the LBMA in a hugely rehypothecated market where way more contracts exist than bars standing behind it. To your point, we saw Saudi Arabia jump in, and I think it bummed a lot of people out that they bought SLV, but the amount that they bought in SLV allows them to actually stand for delivery. I think there are a lot more countries that have been doing this just on the down low than we are led to believe. You look at China as the second largest producer in the world, flying all around South America, going directly to the miners. Sean Kunkun has talked about this, CEO Dolly Varden, where they go right to the miners, disintermediating the marketplace, buying doré and concentrate right from the miners, paying double what the West will, and sending it back to China to refine it. They control the majority of all the metal refining and rare earth refining, so they just put it on a barge and send it on back to China. But it's coming from the second largest producer in the world. So that should put a little bit of context into it. If they're making that much or producing that much, why fly all the way to South America to pay double what the West will to buy doré and concentrate and send it back for refining? I think you will see that. I think it's been there under the surface if you really dig. But I think a lot of countries, especially those in the BRICS, have understood that silver is, and gold, this is a race for the world's commodities. And it's not just the precious metals, it's the base metals, it's the soft commodities. He or she who has the gold makes the rules, is how it used to be. How about he or she who has all the world's commodities makes the rules in the coming future? And I think that's what you're seeing. So, yes, I do think you'll see more countries and sovereign wealth funds probably at some point it'll be more transparent what they're doing. But in a world where information travels so quickly, it doesn't behoove any of these players to let anyone know just how much silver they're gathering. And then look at the U.S. I don't care what anyone says. It ain't about tariffs. I've been saying that for a year now. It is not about tariffs. It is not about arbitrage. Sure, there's a little bit of that truth, but it's being reshored. And, I've been screaming this. Look, all this silver coming into the country can't just be about tariffs. That was the ruse to get it all back here. Some of it's flowed back to ease the burden at the LBMA. But what it really is the smart money trading ahead of the news. Like, they knew that this was going to happen. They knew that it was going to be reclassified a critical mineral. So what do? They reshore it. They say it's tariffs so that London releases it and Switzerland sends it. Oh, by the way, it's reclassified. Everything that at that level that they do, you look at all the massive gold accumulation in 2016, 17, 18, and 19, and then the Basel III reclassification of gold. These things that at the highest level, information is worth more than anything. And the people accumulating it, the central banks, the sovereign wealth funds, they're not just the most well-funded. More importantly, Jess, they're the most well-informed. And I think that's really what you would expect to see, the inside money moving first. And I think we're transitioning to that point where it's now out in the open, at least more so than it's ever been. And at that point, it's anonymity be damned. It's everyone rushed to secure what they can while they can. So yeah, I think you will see that.
According to Andy Schectman, the global silver market is now sitting on top of a fragile, over-leveraged structure. In London alone, 700 to 800 million ounces trade daily, and over a billion if you include COMEX and Shanghai, yet there are only around 150 million ounces of actual metal available. This means the system is balancing on paper promises that cannot survive a major delivery demand. One failure, and the entire market structure is exposed. Current events confirm the stress. LBMA inventories continue to fall. COMEX is seeing more contracts stand for physical settlement. Physical premiums are rising, and backwardation, where spot trades above futures, has returned, signaling that real metal is harder to find than paper contracts suggest. This is exactly what Andy has warned about, a system running out of physical silver faster than anyone expected. Meanwhile, sovereign demand is exploding. India has accumulated 600 to 800 million ounces over the past few years. Russia added silver to its strategic reserves. China, despite being one of the world's top producers, is flying directly to South American mines, buying doré at double Western prices, then refining it back home. You don't do that unless you're preparing for serious shortages. Then came the turning point. The U.S. government officially designated silver as a critical mineral, giving the president legal authority to restrict exports for national security. Combine this with China's tightening controls, and you now have the world's largest metal-consuming nations signaling that silver is no longer merely industrial. It is strategic. Institutional behavior reflects the shift. Analysts who once recommended 5% gold exposure are now openly saying 20 to 25%. Morgan Stanley, Bank of America, and Jeffrey Gundlach all issued bullish guidance, with BofA's short-term target at 67 silver and major firms predicting 6,000 plus gold. These are not fringe analysts. These are the voices that influence trillions of dollars. Yet retail investors remain heavily leveraged into stocks, margin debt, and derivatives, completely unaware of the massive inflows of gold and silver into COMEX and U.S. inventories over the past 2 years. Andy argues that insiders knew long in advance that silver would be reclassified, and they repositioned before the news became public. His core message is blunt. Silver is being drained from every direction. Official demand, industrial demand, investor demand, all rising at the same time supply is falling. When the system breaks, prices won't rise gradually. They'll erupt. We're already seeing the early signs. The calm before the next leg higher is ending.
I've never seen before in my career, and I've talked a little bit about this, but it's worth mentioning to your listeners. Look, in my career, almost 36 years, I've never seen Wall Street or Main Street acquiesce to anything other than 5% of gold, of an asset, a portfolio rather, being in gold. And it was acquiescing at best. Fine, put 5% of your money in gold. Now, recently we've seen the chief investment officer of Morgan Stanley say, no, sell half your bonds and buy gold. Their new platform, according to him, is 60 stock, 20 bond, 20 gold. You got Michael Hartnett, the chief analyst for Bank of America, with his very, very, very expensive newsletter that goes directly to the institutional traders. It's like many thousands of dollars a year. He's saying, no, it's 25, 25, 25, 25, 25 gold, stock, bond, short-term treasuries, gold. You got Jeffrey Gundlach, the bond king, saying, no, Monday morning, 25% in gold is not overweight. And then the 6,600 part, that's Jeffries. They used to be a primary distributor for all the world's mints. And they said 6,600 is their next target, at least intermediary target, for where they expect gold to go before it takes a little bit of a breather. You have massive institutional money, traders and analysts and chief investment officers speaking to the most sophisticated traders in North America, saying 25% of your portfolio in gold is not too much. I mean, that's just insanity, if you ask me. Goldman Sachs said, if 5% of the money comes out of the bond market because they fear that there is no independence on the Fed anymore, that gold would go to 5,000 like that. Well, when you have Stephen Mirren sitting in the Fed, who it was Trump's advisor and the architect of the Mar-a-Lago Accord, he fills the vacated spot. What independence? The Fed has no independence. So gold is moving in that direction. You got Bank of America just saying $67 for silver is their target for next year. So when we talk about record highs around 4,400 gold and then it falling off and everyone saying it's over, I find it disingenuous at best when you have these analysts saying this. And here we are back up above $4,100, and that shows the strength and the underlying support. So gold's held up because of central bank accumulation. And to me, that's what we've been saying forever. We've seen physical demand rising and global monetary stress increasing, all of the stuff that we talk about. But what I believe we are seeing, kind of what we were just talking about, is a slow motion global run on physical gold. And the pullback from those highs wasn't a breakdown, it was a consolidation. Catching its breath, not throwing in the towel. Pick your euphemism. But the bottom line is gold isn't just strong, it's structurally more attractive than many people realize. And I think that the recent pause is the calm before the next leg higher. That I do believe. And maybe this is it here today as we're up over $100 as we're talking. The awakening has started. You know, my whole career, gold and silver were dismissed as relics. And, you know, even when you try to get a bank account in the precious metals industry, at least for many years, you were lumped in with marijuana dispensaries, strip clubs, liquor stores, gambling casinos, kind of thing where, you know, it's very fringe and very speculative and dismissive at best. And I think that's all part of the game, you know, to push everyone into a system that is dominated by Wall Street and paper promises. But now Costco and Walmart, to your point, sell bullion, and even the media talks about dollar debasement. That's not normal. None of that is. That's all new. I would argue, to your point, we are in the early stages of a monetary reawakening because people feel something is broken. Most people feel it in their rising bills and their rent and their stagnant wages. And they may not understand fiat currency or macroeconomics. I try so hard to make this easy to understand. It's very hard when you use words like Triffin's dilemma or, you know, Cantillon effect or rehypothecation. I mean, people don't get it. I try hard, but they do understand that they feel something is broken. And as trust in institutions continue to erode, you will see this shift accelerate because gold and silver aren't promises, they're real value. And I think the world is very slowly waking up to it. We're on a path towards sound money resistance, but that's at a much higher level. This is the level that we've been talking about earlier, the sovereign wealth funds, the commercial banks, central banks, they are aware of it. I think the U.S., the people that make the policies are keenly aware of it. The public isn't there yet. Yeah, you see some interest in Costco and Walmart, but if you look at the numbers, last I looked, in the U.S., you have the insiders on Wall Street leaving at a record clip, and Warren Buffett with $500 billion in cash, and all the insiders selling, Jamie Dimon dumping stocks, Zuckerberg dumping stocks, Bezos selling $7 billion of Amazon, the big insiders and board members of Nvidia doing the same, institutional traders, you know, selling $2 billion a week. At the same time, the public has its largest allocation to the stock market in history, over 54%. The largest amount of margin debt, 1.4 trillion. It went from 1 trillion to 1.4 like that. And also the largest exposure to options. So you have mom and pop all in stocks, all in on margin, and all in on leverage with options. At the same time, the big money's moving away. At the same time, you're seeing massive deliveries on COMEX. Now, these are people that are incredibly sophisticated and are trading in billions upon billions upon billions upon billions of dollars every week or month into COMEX. I don't care what argument people want to make. The people at that level that are bringing in that kind of metal, they don't do things, pardon my French, for shits and giggles. They have all of the information. They know what's coming. And isn't it interesting that as we become a net exporter of gold, that gold, even with its pullback, is up north of 50% this year, an asset that pays no interest. But who's been accumulating it all? Not only the most well-funded traders in the world, the most well-informed. I've been screaming this. You can't look at the mainstream media and base your conclusions upon a faulty narrative where all of the media outlets are controlled by 4 companies. Instead, look at what the biggest money in the planet is doing. And yet, there has not been one mainstream news article about all the gold and silver coming into COMEX. I have yet to see anyone talk about it, or any Jim Cramer, or any of these so-called experts. Why isn't anyone saying, why has the United States imported billions upon billions upon billions? Oh, that's right. We've been doing that with silver too. And we did just reclassify it a critical mineral. Maybe the insiders knew what was coming.
We're now entering a new era for precious metals, one driven by strategic policy, systemic stress, and a global race for hard assets. Andy Schectman's warning is clear. The window to accumulate physical silver before the rest of the world wakes up is closing fast. The insiders have already moved. Governments are preparing. The public will be the last to react. And by then, the revaluation may already be underway. If you found this breakdown valuable, smash like, subscribe, and turn on all notifications. Your support helps this channel reach more serious investors and keeps these deep dive analyses coming every week.